What are the expectations, and is this a sign maybe that the job market is slowing down just a bit?
I mean, the expectations I've seen are kind of 160-ish. I think that's low. I think what people have done is they've forgotten about the GM strike already. And so, there's a strike that actually hurt October payrolls and boosted November payrolls. And now people are expecting that we're going to kind of come back to the October level. The October level was biased lower. So just take the average and move it forward would be, in my mind, the safer bet. So I think the number today is going to look pretty good. It's probably going to be better than expectations. And if people don't like the number today, they're just going to point to the wages and see if that actually gives them the story that they want to tell, because it's all about telling the story now about where the U.S. economy is.
So, Drew, what numbers then are you kind of expecting to see from your mind?
I'd say it's probably going to be just under 200,000, and I think the wage numbers are going to look pretty good. So people are going to realize that the labor market really is tightening up.
All right, so the labor market's tightening up, David. This is an economy in the U.S. that is still relatively better than many other places around the world.
It sure is.
And the stock market reflects that. Rightfully so?
Yeah, sure it is. Look around the world. The United States is certainly the most dynamic market in the world today. To Drew's point, I would take the other side of that. I think we're kind of late in the cycle on jobs. It's not going to surprise me if we start to slow down. Where I'm going to look if there's going to be a ripple in the economy is probably the claims numbers that happen on Thursday. Every Thursday we get those. That's likely where we're going to find, where the economy is rolling over at some point. If we start to see that number rise, that tells me there's something wrong. But for right now, like Drew says, it's a very good numbers, and we're a consumer-based economy. You got to have a job to have a strong spending economy.
What about those wage numbers that Drew was referring to?
Yeah, they're certainly important. Look, for the last decade, Americans hadn't had a raise, and in recent months, in fact, over the last year, wages have been climbing. It's reflected in the consumer numbers. We saw manufacturing roll over this year, but that's largely a trade dynamic. I think those numbers will improve once and if this trade deal is signed. We'll push that out, and maybe let's look where those PMI numbers, say 3-4 months from now.
All right, the second half of last year, Drew, many of us in the news on Wall Street were referring to some of those ISM and PMI numbers on the manufacturing side of things, not just in the U.S. but globally, that showed signs of really kind of starting to tail off. Is it fair to say that those have turned around now, or is there still reason to be maybe a little bit more cautious about manufacturing, not just here, but around the globe as well?
Manufacturing sector is still a little weak, but to David's point, until you see claims roll over, the economy is not going to roll over, and that's because if the consumer holds in, whatever else happens pretty much is immaterial. And we have a very strong consumer right now. They've got great balance sheet. They've got a lot of savings. They're beginning to see what looks like could be solid wage gains, and you're seeing stories about companies really having to pay up for talent. And I think that's all going to translate to an environment where, in the absence of layoffs, people are going to spend money.
So, David, this idea now that the economy is in a good place is also what's underpinning the market moves right now.
Yeah, but we need more than that. We certainly need more than that. We can't have another leg higher on multiple expansion like we had last year. Investors want some food on their plate. Right now, you've got earnings expectations. I think we've got about 177 is what we're looking for in 2020. That's got to hold, or at least not drop so much. Where that's 9-10% growth. That's a good base case. But tell me where interest rates are going to be 4, 5, 6 months from now. That also weighs on the multiple as well. We can sustain higher interest rates, but only if earnings follow.
All right, so Drew, we'll give the last word to you. Just a few seconds left here. What's the big thing beyond this jobs number going into this year that you're watching for?
Productivity. If you get productivity, firms can maintain margins, expand margins, and you'll get that, and you'll get those earnings.
We're looking at the elephant in the room, the election.